Okay, recording this video Sunday 23rd of January 2011, and it's pretty late in the day. It's about 9:30 p.m. Chicago time, so this video is not going to hit the website Sunday. I might put it out Monday or maybe delay it till Tuesday. But anyway, a couple of data points on the commitment of traders data kind of came out that I thought were interesting, and a couple of emails received this weekend, people asking for an update on the commitment of traders. To be honest, I blog less and less about the commitment of traders data. I find on a week-by-week kind of basis it clouds my judgment when it comes to kind of day trading signals. But on a longer-term basis, I still think it's very interesting to see what the professionals are doing and how they're positioning themselves. So just want to show you a couple of charts on commitment of traders data. The first one here is just the SP contract. So this is the large S&P 500 futures contract, which gives us kind of the full data for history on commitment of traders data. And in each of these charts there'll be two indicators. The one at the bottom here is the oscillator, commitment of traders oscillator. I've never released this kind of indicator publicly, so I'm not sure I'm going to. It just gives kind of a roughly overbought, oversold kind of reading of price versus the commitment of traders data. But what I am going to talk about is this kind of indicator here, which is based on the one of the indicators that's kind of available free on the commitment of traders feature article on the site. And this just plots the professionals positioning as a percentage of open interest, long or short. And I actually flip this, so data points that are positive here actually shows the commitment of traders shorting, which means they're effectively hedging in uptrends. And then added to this are kind of divergence signals, and the divergence signals, again, proprietary at the moment, but it uses the same algorithm as Better Momentum for generating divergence signals, which I quite like the algorithm that I've got for Better Momentum and divergence signals, so I've just kind of replicated that on these charts. As you can see, at certain kind of turning points, it generates some pretty interesting signals. So at the market top back here in 07, we had some divergence signals here. You had some more leading into this kind of decline. We had a good one a couple of months ago, back in September for the beginning of this run up. This kind of pairing here showed the decline coming here. With divergent signals, they're never perfect. They're always going to be a little bit early, but sometimes they can be crackers in terms of good signals. So that's what I show. And so basically it's kind of looking at what the professionals positioning themselves, whether long or short, versus price, and it kind of just generates these divergent signals that are replicated on the price bar and on the commitment of traders data here. I'm tending to use these kind of the inverted commitment of traders data because it just shows kind of the flow, if you like, in terms of what the professionals are doing. Good example of that is just a really long-term chart of gold on a monthly chart, and you can see here this is going back kind of 15 years on the gold chart, and you can see at this point here there was a real flip in terms of how the professionals were positioning themselves at this point versus this point, and that really marked the low in the gold market down at kind of $325 odd in 2001. And since then the professionals have been positioned in a fundamentally different way than they were kind of during this downtrend. So when we look at kind of the shorter term time frames on gold on a weekly chart, the way the professionals are positioning themselves coming into this kind of 1400 levels, they're starting to take off some positions here, so that there's less kind of hedging going on here. But it's not dramatic. We saw some activity here that generated bearish divergence signals here, leading to some weakness here, but we've not had a similar kind of signal on gold on that chart. So no signals in terms of gold, but there is a change in the way the professionals are positioning themselves to what they were back at 900. Then looking at crude oil, that kind of interesting again. The professionals, if you look at this in terms of divergence signals in this run up to this 150 plus kind of signal up in crude, back at the peak of the market we had a beautiful little kind of divergent signal here. Again, lots of early signals coming into this rise, but that was a cracker up at the top here, and then down at the bottom again early signals, but down at the bottom nice kind of signal here. And the way the professionals are positioning themselves in crude at the moment has not changed over the last several months. I'm quite bullish on crude, and I think it's going to break 90 and go to 100 plus. But and that would suggest the commitment of traders data is kind of supporting that, with terms of their positioning in terms of the changes here. And I'm being careful about saying kind of bullish versus bearish, because this indicator is actually flipped to the reverse. So in fact, the professionals here are more bearish. There's more kind of shorts than longs at this point, so there's more kind of hedging activity going forward. But again, what we're looking for is changes in this activity. When you see this type of divergence happening as price rises and we get less and less effectively hedging going on by the professionals here, that's what generates the divergent signals here. So because we're not seeing those divergent signals here, and we're seeing still high levels in terms of commitment of traders activity here, that would suggest that this uptrend would continue. Now get to some signals. Recently we had a great signal on the bond contracts. So this is 30-year bond contract here, and you can see up at this top up here, I forget what the level was, but it was about 130, 131 on the 30-year bond contract. A couple of bearish divergent signals here. There were great little signals, kind of overbought in terms of the oscillator and so on, and we kind of fallen off. I mean, this was a dramatic decline in terms of bonds here. So it was kind of testing a new high. And when I've been talking about this in terms of the better indicators, we had all kinds of divergent signals, end of trend warning signals, and so on. And it was just great to see the commitment of traders numbers kind of lining up with that, and that's why we've had a big decline here. I suppose I've been looking for a little bit of a rally in bonds. We've not seen it. We've just been kind of in this congestion phase, so I'll be interested to see in the next week or two whether we do actually get a rally in bonds. But certainly in terms of commitment of traders, there's no kind of data there. But that's a recent kind of good signal in terms of bonds. And what I want to go to is some of the FX charts, and the first one I want to show you is a weekly chart of the euro. So now this just signaled this week one of these kind of bullish divergence signals here. You can see coming up on this data point here. Again, nice kind of signals previously at these kind of bottoms and tops and so on. Yes, we're always going to get some early signals, but it shows us that there's some weakness kind of likely, or some strength likely in the market. And I think this is quite interesting, because when we look down at the lower time frames, we've had our end of trend and second cyclical turns after an end of trend warning signal on the euro, and that's this week kind of being supported by some of the bullish divergence signals on the weekly chart. And then if I go to the euro on a monthly chart, same thing, bullish divergence pattern here. Now the month is not over in terms of the data point here. We've got another week to run in terms of getting this full data for this data point here, this last data point that'll generate this signal. But if we're in the same kind of region in terms of the professionals positioning on the euro, we're going to maintain this bullish divergence signal. So that's kind of popped up on both the weekly and the monthly chart. And you can see weekly and monthly signals haven't been bad previously. British pound, similar thing. Let me look at that on a weekly chart. Again, a few months ago we had a bullish divergence signal here. Nothing to say in the recent past that we got kind of bearish divergence happening there. But this week on the monthly chart of British pound, that's where we got the bullish divergence signal. Again, if the data kind of still supports this at the end of the month, when we get another kind of data point next week, then this signal is likely to kind of hold. So I think that's quite interesting. When I look at, let me see, Aussie dollar. Aussie dollar, we've not got any signals here, but there's still quite a lot of strength when we look at the positioning of the professionals here. They've not fundamentally changed what they've been doing over the last several weeks or so on there. So what this suggests is although all of these currencies, certainly Aussie dollar at parity with the US dollar, is incredibly strong and overbought, and there are some reasons why we might see a kind of a pullback in the Aussie dollar. The fact that we got kind of strength in the euro and the British pound is interesting. That still means that the kind of risk trade is on, and so any correction that we might have in equities might be quite a minor correction. If the risk trade is still on and we're still kind of the money's flowing to the euro, the emerging economies, and the pound and so on, that's flowing into risk assets and equities and so on. So we're seeing some kind of topping activity in equities, and I think one of the things that's going on at the moment is nothing's moving in sync at the moment. In terms of the bond market, the equities market, the currencies, and so on. Usually they tend to line up in terms of the risk trade, with the equities going up, commodities going up, euro and Aussie dollar kind of going up, versus kind of the US dollar, dollar index, and bonds and so on. And there's a little bit of flux in terms of all of those things kind of moving in slightly kind of counter trends at the moment. But just wanted to draw your attention to this signal, particularly on the euro, on the weekly and monthly charts. That's kind of come up, and let's see if this has a little play, if this rally in the euro can continue and we can break up to kind of 140 and beyond. I'll be looking at my charts pretty closely this week.